Ever thought about what your morning Starbucks coffee means for the stock market? There's more to that cup of joe than you might think. Today, we're focusing our lens on Starbucks, the global coffee giant that's been brewing up a storm in the financial world lately. Starbucks, a household name synonymous with gourmet coffee, recently released a less-than-stellar quarterly earnings report, leaving a bitter taste in the mouths of investors. The figures were disappointing, falling short of analysts' expectations, and the future guidance wasn't much brighter. With a lukewarm outlook on the horizon, investors are bracing themselves for potential jitters in the market. The question is, what does this mean for Starbucks and its shareholders? Is it just a blip in the coffee cup, or is it a sign of a more significant issue brewing beneath the surface? Let's delve deeper into what these numbers mean for Starbucks and its investors. Starbucks, a global coffee giant, recently reported a miss in its quarterly earnings. This is a company that has consistently brewed up strong results, but this time around it seems they've served up a bitter cup. The numbers have come in, and they've not hit the mark. Analysts were expecting a robust performance, a strong blend of growth and profits. But what we got was an earnings shot that fell short of the mark. It's a surprise, to say the least. Starbucks, with its iconic green logo and global footprint, is a staple in the portfolios of many investors. The expectation was for strong results, the kind that keeps the investor community buzzing. But instead, the reality was a lukewarm earnings report that left many with a bitter aftertaste. This has led to disappointment among analysts and investors alike. The market was primed for a strong cup of earnings, but instead, it got a diluted brew. The taste of expectation has been soured by the reality of performance, and it's not just the investors who are feeling the pinch. Analysts, who have long been bullish on the company, are now revising their forecasts and rethinking their strategies. But the earnings miss wasn't the only concern raised in the report. Starbucks also served up a side of cautious guidance for the future, a move that has further brewed uncertainty among the investor community. A lackluster outlook for the future has also raised eyebrows among investors. Starbucks, the titan of coffee and a global powerhouse, has been upfront about potential challenges in the upcoming quarters. The company's recent guidance has been on the lighter side, suggesting that things might not be as smooth sailing as we're accustomed to seeing. This light guidance is a reflection of the company's cautious stance, perhaps an indication of a bumpier road ahead. It could be due to a range of potential factors, including increased competition, rising costs, or changing consumer trends. Whatever the reason, it's clear that Starbucks is preparing for a potentially challenging period. Now, this light guidance hasn't gone unnoticed. Analysts, those who keep a keen eye on the company's performance, have taken note. In response to the company's cautious outlook, they've lowered their price targets for the Starbucks stock. This essentially means that they're expecting the company's stock price to be lower than previously anticipated in the near future. It's a significant move that suggests a shift in confidence towards the company's growth prospects. So what does this mean for Starbucks? Well, it's definitely a blow, but it's also a wake-up call, a signal that the company needs to reassess its strategies and navigate the changing landscape effectively. The market has reacted to this news, and it's not looking too good for Starbucks. But remember, in the world of business, fortunes can change rapidly. Only time will tell how Starbucks will weather this storm. Shares of Starbucks have taken a hit following the disappointing report. The market, like a hawk, quickly reacted to the less-than-expected earnings and cautious future outlook. Starbucks' share price has seen a decline, mirroring the uncertainty that now shrouds the coffee giant. This downward trend is a clear reflection of the investor sentiment, which has been shaken by the earnings miss and light guidance. Looking ahead, Starbucks could face a challenging road. The light guidance suggests potential hurdles in the company's path. Whether it's increased competition, changing consumer trends, or operational challenges, the future is a puzzle that Starbucks will need to solve. As the story unfolds, it will be interesting to see how Starbucks navigates these headwinds. Will they bounce back stronger, or will they continue to struggle? Only time will tell. What does the future hold for Starbucks? Share your thoughts in the comments below, and don't forget to subscribe for more business news updates.